The market pops and then drops as the bears start selling late. Are they here to stay? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about a few possibilities, but ultimately we were looking for a pullback. Now, one of those possibilities was that we could pop it higher before we pulled back, and that's exactly what we saw. The market popped higher on CPI data, but then sold off much of the rest of the day with the bears taking control. Now the question is, can they follow through? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500, and we did get the CPI spike here today up toward that 4180 area. They were able to take out this high real quick, and then they immediately started to sell down much of the rest of the day, giving a little bit of a rebound before the Fed minutes, and then selling off again at the Fed minutes. So there's a couple possibilities here. The first would be that we are in an A, B, C that would target this low right here at about 4100 that we've been bouncing off of. And then we'd see that would be an A wave. Then we'd look for a B wave bounce, and then C down toward the 4050, 260 area that we've been talking about for a little bit now. The second would be that we are in an A, B, C that heads directly down, especially given the posture of the NASDAQ, which is in a more sell-off type position, which we'll look at here in just a minute. But that would be where we're in A and B, and we've already started the bigger C down toward 4050 directly, where it would hit about this 1618 extension of A and B to complete the C wave before then giving us a bigger B wave up and then C down from there. So those are the two possibilities to the downside. It's just going to depend on what happens at 4100. If we bounce there and we get a B wave, then obviously that's what we're looking at. If not, and they're able to break through directly, I would expect them to go toward 4050 to 4060 in a more direct route. To the upside, it is possible they are still above this low. It is possible that they can make one more push higher, but if they break this low right here at 4096, that goes out the window. But it is possible they can try to make one more push higher toward that 4195 area. Given today's action and the overall candle that we saw today and the volume that we saw today and the negative divergence on the MACDs, I don't think that's very likely, but the market gets to do what it wants. So our primary paths are to the downside. We would look for at least a test of 4100 again, and then if they can break it, a more direct route lower, if not a bounce in B, and then coming down to break it on the next term down. Over on the NASDAQ, okay, a little bit different of a count on the NASDAQ, and this is why I do have that direct route lower on the ES because of how NASDAQ is postured. On the NASDAQ, it does look like we got our A and our B waves here, and then it does look like we got one of C and two of C, and then one of 3 and 2 of 3, and now we're looking to take 3 of 3 lower here of the C wave. And the minimum target for 3 of 3 is 12,921, but we'd really expect 12,872 before we see a little bounce, and then lower from there to the 12,793 area, and then a little bit of a bounce, and then lower from there to the 12,713 area. This would be a standard C wave follow through down toward that 12,740 target we've been talking about. It actually targets 12,713, so pretty close to that. And that is where we would expect NASDAQ to follow through to if they're going to do this. Now, we would like them to stay under the 13,000 level, as that is the 618 extension of waves 1 and 2, and a very key level to hold if we're going to have a more direct move lower. But if they come down to this 1.0 and move back up through the 618 extension, then it is possible that we got an A, B, C for A, and then we'd look for a B wave and then get the C wave from there. So we could look for a bounce off of 12,921. However, if they move directly through 12,921, we would expect the more direct route lower. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it and become part of our trading team before you ever spend a penny. You can cancel at any time. We just started our training program, Elliott Wave for Beginners, and we have all of these videos in here that teach Elliott Wave the way I use it. It comes with both memberships And in our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are looking for day trading as well as individual stocks, please check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, key takeaways for today. We are looking for follow-through from the bears. If they can break directly through this 4,100 level, we would look for a more direct route towards 40.50 to 60 from there. However, if they hold that level and bounce, that could be a B-wave bounce and then C down from there. Ultimately, of course, they can push higher and one more push, but with all of the things I mentioned earlier in the video, I don't see that as likely. In the NASDAQ, a little more of a direct path lower as they are in a C wave. As long as they can push through the 12,291 or 921 area, we would expect them to continue on to the 12,872 area before seeing a bounce, then another move down, small bounce, and another move down toward 12,713. However, if they do bounce it off that 12,921 area, we would expect a B wave and then a bigger C wave after that. Guys, that is the market update for today. I will talk to you tomorrow.